Hello everyone. On behalf of Bajaj Finance Limited, I'd like to welcome you all to this exciting session. In recent times, we have witnessed increased interest of investors in index funds. And in today's session, we strive to bring to you information about India's first microcap 250 index fund from Motilal AMC. For this session, we have with us Mr. Mahavir Kaswa, Senior Vice President Research, Passive Funds from Motilal Oswal AMC. Mr. Mahavir has over a decade of experience in capital markets and is a qualified CFA. Without wasting much time, I would like to hand over the stage to Mr. Mahavir. Mr. Mahavir, thank you for joining us. I hope you can take it from here.
Sure. Thank you so much, Rohan and Bajaj Finance for inviting me here. I again welcome everyone. There is an echo coming in. Okay. So I welcome everyone on this forum today, and we are here to talk about one of the most recent offering, that is new fund offer for Motilal Oswal Nifty Microcap 250 Index Fund. If I step back, because this is one of the passive fund that we are launching, and if I step back and actually give a general perspective about the passive funds in India, maybe back 5 to 7 years before, whenever we used to talk about passive funds in India, it was very obvious for us to talk about Nifty 50 or Sensex. That's how the situation was at that point in time. But coming fast forward today, as we see to look back to the passive funds, we already crossed total AUM of 7 lakh crores exclusive for the passive funds. That is span across different risk buckets within the equity, international, debt, and commodity. There are about 90 plus unique strategies that are available for investors to invest into it. Motilal Oswal has been into forefront in launching one lot of innovative and industry's first schemes in India, such as Nifty 50 Index Fund, Nifty 500 Index Funds, Mid Cap 150 Index Funds, Small Cap 250 Index Funds. These are one of the most popular right now among the investors, and we were the first one to launch that. Now, when we were thinking about launching a new product, particularly from investors' point of view, one of the very obvious questions that came to our mind is, what is something new that we can add to the investors' kitty or their product book offerings, so that investor can take the benefit out of it. And we of course devoted a lot of time in terms of identifying those opportunities. What we actually found out is that microcap is such one space where probably neither active fund is available nor passive fund is available. And since we have Nifty 500, we thought that Nifty 500 index fund, this microcap index fund that we're launching today, can be a very good natural extension. Now, for the benefit of investors, I just want to clarify one important point. This is more of an educational conversation right now. For any investment advice, I would recommend talking to your financial advisors before taking any investment decision. So with your permission, I'll go to my presentation wherein we will talk about particular about this fund. I'm just sharing my screen. And hope my screen is visible. Motilal Oswal Nifty Microcap 250 Index Fund is one of the most innovative passive fund in India. Is the only passive fund in India. The new fund offer starts from 15th June and it will close on 29th June 2023. As the name suggests, of course, this will include small cap companies, and I'm going to get into the detail as we move forward. But just quick introduction to Motilal Oswal AMC. Motilal Oswal, as a fund, as an overall group name, is very much known for the equity, and for a very important reason that we are very strong in equity. It may be institutional research, maybe private equity, maybe asset management, maybe investment banking. There are many verticals wherein we are one of the leaders in the industry. Particularly talking about the Motilal Oswal AMC, if you look at our active funds, they all are benchmark agnostic, a strong conviction bet active fund that we have. We are very strong in terms of active fund management, and at the same time, over the last 4 years, we have made ourselves leader in the passive funds as well, where we are one of the best and offer a widest product offerings in terms of passive funds as well. As we speak, our investment philosophy about active fund is predominantly based upon the QGLP framework, which involves quality of a company, growth of a company, longevity of a company, and a fair price is also another important point. Various fund managers keep it in mind before selecting a stock for the active funds. For passive, one of the core motive, whenever we think about any new passive fund idea, our core motive is to focus upon simplicity or easiness to understand a particular strategy, economic, which means keep the cost as low as possible, and also make it effective, so that any passive fund that we launch has to make sure that the target risk exposure has been given to the fullest. So it should be very effective for your wealth creation journey as well. Um, Quickly in numbers, we manage about 10 active funds with a 20,000 crores of AUM, few passive PMS funds and AIFs together, about 15,000 crores of AUM. And when it comes to passive, there are 29 passive funds with a 16,500 crore of latest AUM. This is a dated data, but the latest AUM is about 16,000 crores of a passive fund particularly. Like many investors, including you, we have earned more than 12 lakh investors trust in us with a 19 lakh, more than 19 lakh folios as well. Without getting into too much of other these things, directly coming to the microcaps now. So when we talk about this concept, I think it is one of the most interesting questions that comes to our mind is what is the microcap? How do you define the microcaps? And it's very important before we think about this kind of a opportunity. If you look at back in 2017, 2018, SEBI had come up with a large, mid, small categorization. That is a very important step in the overall investment community that SEBI has taken. The way SEBI divided large, mid, and small was top 100 companies as a large cap. The next 150 company, which means from 101 to 250 companies, were defined as a mid caps, and all remaining companies actually were small caps. That's how the SEBI defined it. However, NSE has done actually one excellent thing wherein because small caps are not all small caps, but as we move forward into small cap universe, we realize that there are smaller companies as well, and that's where NSE defined smaller small cap company as a micro cap company. How they define? If you look at this universe, which is from 501 to 750, those 250 stocks after Nifty 500 composition. So if you look at Nifty 500 constituents, the 250 largest company after Nifty 500 stocks is your microcap universe. For simplicity, I'll repeat again. 250 largest stocks after Nifty 500 stocks is your microcap universe for this particular concept. And as we expect, large cap consume maximum portion of the market capitalization coverage, followed by mid and small cap, and the micro of course would be very small as compared to the large, mid, and small. Now, it is also important for us to understand the characteristics of this company, how these companies are. Um, Companies, of course, being small, they are a lot more agile. They are a lot more flexible, or they don't have a lot of bureaucracy in terms of their decision making. They are very quick in terms of making new decisions, implementing them, and seeing the end results of that as well. The teams are usually also unlike maybe a large company like Reliance or HUL or maybe many such large company. Their teams or the overall employee strength is also small, which allows them to navigate through the tough terrain much faster. These companies generally are more driven by promoters. Promoters actually leading these companies from the front, and that also helps them to reduce the bureaucracy, implement the important decisions, bring the new products to the market much quickly, much faster. Companies also are characterized to be more focused upon customers. They pay a lot more attention to customer retention, customer acquisitions as well. Of course, other companies also do that thing, but this is a lot more standout factor that comes out when we talk about the microcap companies. Another interesting point about the microcap is that when we look at that, these companies' business models are a lot more niche. When I say niche, it means basically these businesses are generally overlooked by large cap and mid cap. And why particularly? Because they don't find economies of scale in such businesses. Generally, the pie for this business opportunity are smaller, and that's where these companies find a lot more efficiency and interest, because they know that mid and large cap company will never come into the space because the pie is relatively smaller, and that's where these companies thrive in terms of the business as well. A lot of companies which are into their smaller companies, which may also have potential to become a very large or maybe mid or small companies also, are start from this phase, and then they eventually go to the upper bucket, which is a small cap, mid cap, and large caps as well. Many companies go through this phase as well. But however, when we talk about all these important characteristics or the positives about those micro cap companies, we also need to remember that being smaller companies, there are some challenges also they face, which is like getting a quality human resource, or maybe raising a capital for their business purposes, maybe raising the equity, maybe raising getting the loans from the banks. Generally, they have to pay a little extra to get that money, because the credit risk perceived to be higher need not be the factual one, but people perceive to be a higher risk, and that's where they face some challenges as well. These companies being small, sometimes a major regulatory change can also result into a company probably losing significant portion of their business, or maybe at a worse situation, they may also be required to shut down their businesses as well. Many companies also get acquired, which is also a positive sign for these companies, that they being acquired by the larger mid or small companies sometimes. So these are some important characteristics we should keep it in mind when we consider the microcap as a strategy. Now, why microcap? That is something important, and particularly I'll talk about that why microcap in passive fund particularly. Now, this is a bit of a technical, bear me, but I'm sure as we finish this conversation, you will probably understand that why passive fund in microcap makes more sense. Looking at this chart, these charts basically help us understand that how many research analysts coverage stocks on a particular buckets. So large cap, mid cap, small cap, and micro caps. And as we see in the first segment of the chart here, we notice that the highest coverage is of course to the large cap. That's where the maximum number of analysts are covering those large cap stocks. As we move forward, the coverage starts falling, and mid and small particularly, and especially the micro.
Mahavir, sorry to disturb you. I guess it is not getting displayed, the slide.
Okay, I'll probably stop and share again.
Yes.
Thank you for bringing to my notice. Hope this is visible now.
Yes. If you could, yeah,
Yeah,
do the
I'll
full
come back.
screen on it presentation.
Yeah. So I'll just start over again. So one of the important reason, can you please? Thank you. So if we look at the analyst coverage, because whenever it comes to investing and particularly stock picking, the research coverage is a very important point for a lot of fund managers. And when we look at this chart, what we see on the screen is that the large cap stock has the highest number of analyst coverage, which means there are more number of analysts covering large cap stocks as compared to mid and small cap. And particularly micro cap, if we look at this data, what we find is that only on an average, two analysts cover a micro cap stock. Now that's a very basic information or basic coverage, and that may not be enough for the lot of active fund manager to take a bet on a microcap stocks. So as we look at the following slide, we will find out that why the coverage for the microcap is small also. But I just want to substantiate this chart to a pie chart. Basically, this two numbers also is actually important to break into a different coverage aspect. And if we look at this particular for blue segment, what we find is that out of 250 stocks that is part of the microcap index, more than 100 stocks have no coverage at all, zero coverage. Now, there is no single analyst who is covering these stocks. That's very important, and which means this is completely out of purview of a lot of fund managers. If we look at uh, about 110 stocks have a analyst coverage less than five analysts covering those stocks, right? So again, this is probably not enough for a lot of fund managers, because unless they get a variety of research insights, they don't find it comfortable to buy this kind of a stocks. So which results basically into institutional blind spot. What I mean by that is, if you look at this chart particularly, we basically looked at entire AMC, the mutual fund AUM on equity side, and what we found out basically is less than 4% of the AUM is invested into microcap stocks. and that's a fairly small portion of the AUM invested into the microcap stock. And the previous slide that I showed you was the probably the primary reason wherein not many active fund managers are coming into the particular this space. Also, of course, there is another concern maybe some managers may have, which is the liquidity of a stocks, and I'll actually address that also as how we're going to manage the liquidity of this particular segment. Skin in the game is also important. I think I briefly touch upon that these micro companies are generally driven by promoters, and to our surprise, more than one fourth, close to one fourth companies, which is like from the 250 stocks, what we found is that they have a promoter holding more than 70%, and that's very important to note that, because whenever there's a promoter who is managing the particular business, there's a better potential that these companies might do better, especially in their formative phases, right? These companies cannot probably afford a very professional CEO, and maybe the promoter who has a clear cut vision in terms of where you want to take this company. I think it is important to have those promoters retaining the highest stake in the company and leading the company from the front, as compared to large cap, that where we see generally this percentage is very small, less than 4%. Companies are having promoter holding more than 70%. So that's another interesting insight that we found. Now, in terms of small firm effect, what does that mean? Basically, that generally smaller companies tend to do better than the larger companies, and that's what we see also on the chart here. However, we also need to caution to all of you that this is my responsibility to make sure that I also bring to your attention that smaller firms also come with risk, and that's why the smaller companies tend to outperform. Higher risk, higher reward. That's the basically communication here. And this risk are basically illiquidity risk, the risk company specific risk premium, and the growth potential of those companies. All this actually attribute to higher performance of those smaller companies. But as you will notice in the chart also that higher return actually comes with a higher volatility as well. Please make sure that to understand that the risk in this company is also high at the time, as you see the performance is also higher. Of course, very important point to note that here. As we talk about risk also, now what does drawdown means? Drawdown is a completely a negative side of a return, basically. The idea here is for me, like as investors, although I look at the positive side of the returns, but also what if analysis wherein the market crash and how much it crashes and how long it takes to recover as well. So in drawdown, when we talk about drawdown, it will always be a negative number that we will talk about. There will never be a positive drawdown ever. Now, looking at the blue line again, which is a microcap line, what we see is that drawdowns for these companies, potential losses for these companies in terms of the price changes is high and also longer. They take some longer time to recover as well.
Mavir, again, the slide needs to be changed. I guess your slide is not getting changed.
What I'll do, probably some
You
network
need to
issue.
change.
Can I switch off my camera just for the network bandwidth?
Yes, yes,
I'll open when we have a questions answers.
sure. You can click on the presentation so that it's a full screen.
Is it good now? Can you see the slide on drawdown?
Yes, we can see.
Perfect. So I'll repeat again. Apologies for the bad network over here. Like I mentioned, drawdown is a negative number. Basically, it is a metric to look at the downside risk of the particular strategy. So it is always going to look either zero or a negative. That's how you will see the chart here as well. I mean, you don't need to understand technicalities. All I'm going to communicate here is that. Can you please mute? All I'm going to communicate here is that for this particular strategy, because we see higher volatility, we also see the crash during the crash phases. This in strategies tend to fall more than the large cap stocks, and also they will take a little longer time to recover as compared to the large cap universe as well. Because if you see, whenever there's a crash or the fear in the market, generally there's a flight to capital from smaller companies to larger companies. For example, small cap to mid cap or mid cap to large cap, and that's exactly that results into these smaller companies falling more than the larger companies, and that can be seen on the chart as well. I'm moving to the next slide. Before we get into the detail, but I'll probably first introduce you the Motilal Oswal Nifty Microcap 250 Index Fund. Like we briefly touch upon that, this index includes 250 stocks after Nifty 500 composition. The fund will buy all 250 stocks at all point in time. The index is rebalanced semi-annually, which is March and September, and so is the fund will also rebalance their portfolio in respective periods as well. That's important to note here. Like I mentioned, the NFO is going to close on 29 June. Tentative allotment date is 5th July.
We
And
can't change. If you're changing the slide, if you could please change the slide as well.
I have already changed it. It's just probably taking longer time to reflect here. And the minimum investment amount for this fund is maybe lump sum or SIP. Either way, you can start with minimum amount of 500 rupees in this fund. Hopefully the slide is visible right now.
Oh no.
Usually I don't face these issues. Maybe this portal can have some trouble. I'm just resharing my screen again. Can you see it now?
Yes, yes, we can see it now.
Excellent. Right. I'll just pause for a few seconds here. I already explained this is a very simple to understand slide. There is nothing technical over here. It's more of an information slide for investors. Another important point from a investment, in case someone is studying this kind of a strategy, from a constituents point of view, as this fund will hold 250 stocks, the stock specific concentration is very important to understand here. The largest company weight in this index is 1.5%. So that gives me a clear cut indication that this index is a very well diversified index. Looking at the top 10 stock weight also, you will notice that 11.6% is the top 10 stock weight. I hope you can see the screen here.
Yes, we can. Yes, yes.
Yeah. So the index is very well diversified. We're going to hold 250 stocks all point in time. The top 10 stocks can be visible on the screen, which is 11.6%. When we look at the sectoral composition also, it is also very well diversified. There is no high concentration of one sector in this index. The largest sector in this index is industrials with a 26% of weight, followed by consumer discretionary. It is also important to note here is that if you look at Nifty 50 index, for that matter, the largest sector in that index is maybe IT, followed by largest sector in the Nifty 50 is financial services, followed by IT, and a couple of others, energy probably. However, here there's a very well diversification. The industrials, which usually comes in the middle of the ranking, is actually the largest sector here. So, from a sectoral point of view, also when you blend this particular fund with the broader portfolio, this looks a lot more diversified as well. I am moving to next slide, which is a capacity and liquidity analysis. Hope you quickly get to see that. The largest company, as I mentioned earlier, now it is very important to note here that although the name is just microcap, now the India market has grown so large. The microcap, actually the size of a largest company in the microcap index is 10,000 crore. As you hopefully you can see on the screen here, the largest company here is 10,000 crore by full market capitalization, and the smallest company, which is most important here, is 1,000 crore. So larger the size, more the liquidity it is. Usually that's how you will see the market liquidity perspective. As the company is larger, there is a good chance of having the stock being more liquid. And if we look at the free float market cap, which means when we remove the promoter holding out of the this total market capitalization, we see that about 5,000 crores of largest company and about 300 crores of a smallest company. So looking at these size numbers, it gives us enough comfort in terms of being able to manage a certain AUM in a comfortable manner. When we talk about liquidity, it is also important to look at daily volume of a stock in the index. So when we look at the daily trading volume of a particular stock, the most liquid stock was 27 crores, and the worst liquid stock was about 1 crore, which is 80 lakhs. So this is the worst liquidity. This is the highest liquidity of a particular stock in that particular 250 index. And on an average, the liquidity was about 5 crores. So sufficient enough liquidity is available in this particular space, and we will be very closely watching this particular space from a liquidity point of view. In case if there is some challenges, we will of course take appropriate actions as well. As we spoke about concept characteristics, about the product, of course, some we also studied some risk factor about the micro caps. It is also important for us to understand that the performance and the risk, the volatility part of it as well. So as we see here, over a last 10-year period, the CAGR of this particular strategy was 24% as compared to Nifty 50 13%. So which has been quite outstanding. Over a 15-year period also, the performance has been quite outstanding, which is from close to 13% to as compared to Nifty 50, 10.5%. But at the same time, it is important to note that these stocks, this universe comes with a higher volatility, higher riskiness of a portfolio. But when you invest into 250 stocks, the company specific problem is completely gone. There is no need to worry for any investors to think about that. What if one company go bust or something? That's problem. That's not a problem at all, because that would have happened already in this kind of performance numbers as well. So, and despite that, if the strategy is done that well, then maybe I would probably have a less concern about that. But at the same time, like I mentioned, this segment is more volatile. So investors who has a long-term horizon should consider this kind of a investment proposition. If you look at here right now, the volatility numbers, as compared to Nifty 50, they are relatively more volatile. The risk is definitely higher. But if we look at the SIP particularly, if I had done an SIP over a longer period, SIP return had also very good outstanding numbers over here. For a 10-year SIP, the numbers historically were 21% XIR. So over a 10-year, 10,000 SIP, if I had done, I would have invested 12 lakh rupees, which would have resulted into 36 lakh approximately. Note here that there is no cost involved here. It's an absolute index values have been added over here. So actual experience may be different and slightly lesser than what we see on the screen as well. That is very important to note here. In terms of rolling returns also, on an average, this strategy for a 3-year investment horizon has given about 14% compared to 12% by small caps. And as we increase the horizon to 5-year rolling period, it is about 13% as compared to 11.5% for small caps. The data over here shows the chances historically how many times these performances has come into different buckets. So if I talk about double-digit returns, which is this bucket particularly in total, the more than 50% of time this strategy has given double returns for a 3-year investment horizon, and for a 5-year horizon about 64% of the time. But at the same time, also note that the negative return probability also is quite high as compared to Nifty 50 or small cap for that matter. But also look at 20% and above is about 41%, and negative is about 36%. That's historical observations that out of 100 observations, 40 times it was about 20%, and 36 times it was negative returns as well. I think we briefly touched upon the risk already. Volatility drawdowns, we already spoke about it. Liquidity also, I spoke about it in terms of this segment. Yes, is less liquid as compared to large caps, but looking at 100 crore worth of portfolio, it is very easy for us to manage that portfolio, liquid entire portfolio in 3 days time as well. We already have an experience of managing small cap 250 index fund. I'll show the data in the following slide, wherein we are managing that fund also at a very competitive tracking error numbers as well. There are also some questions that we received about company specific problems. There are some companies which are probably bad companies or maybe companies with corporate governance issue. Yes, there are maybe some companies which are landmines, which means they can burst any point in time. And there are some companies which are gold mines. Combined performance is quite high, impressive at a cost of little volatility. But when you invest into 250 stocks, the company specific risk is very well nullified for sure. I mean, also the investor who has a long-term investment horizon should consider after their consultation with the financial advisor. Just summing up, why you should invest in, why should one consider this particular fund into their proposition? This segment, as we saw, is under research segment, wherein the analyst coverage was very, very meager or very undercovered by the research analyst. These companies work in a niche business models. This is the India's first and the only fund in the microcap space. And a very important point also that Motilal Oswal has a proven track record of managing funds in this particular bucket. This is a bucket I'm talking about. Um, about 4 years before, we launched these three funds in September 2019, and we are managing about 700 crores in mid cap. This has gone about to 800 crores as of today. Small cap also 350 crores, and Nifty 500 index funds about 400 crores. Looking at the tracking error number, that's a statistical metric to understand how the well fund is managed by a AMC, and this is a very good tracking numbers in a particular risk bucket that we're managing it. So of course, a proven track record of managing the passive funds at a competitive tracking error is there. We are reasonably confident about to manage this fund also in a acceptable tracking error number. That's where I would probably stop over now. Open to discuss the questions answers in case there are any. Uh, yeah, you're on mute. Ron, any questions? We
Thank
have
you,
two questions.
yeah. Thank you, Mavi, sir, for such an uh, enlightening us with all this information about the new fund. Uh, I will just going through the questions. I'll open the floor for audience. If they have any questions for us, they can post their questions in the chat box, and Mahavir will help us answer all your queries. We'll wait for 20-30 seconds. If any of our viewers have any questions,
Sure.
uh, well, it seems we don't have many questions at our viewers' end. So, thank you, Mahavir, for such an good session. It was very educative. We learned a lot in this session. You helped us understand the definition of microcap, the unique characteristics of microcap companies, and how the combo of passive funds and micro cap is so unique, and how there is a blind spot and opportunity for all of us to exploit and create wealth for our investors. You bought on to notice that it's a high risk, high return category, and also showed the past performance of Nifty 500 250 microcap 250 funds and stocks. So it is ideal for customers and investors who are looking for long term investments.
Absolutely.
Considering all these factors, we thank you for this session in which we were able to understand this fund which Motilal AMC, which is a reputed AMC, has and has a proven track record of delivering benchmark performances. We would like to close this session, and any other questions, if our viewers have, they can post it. Our team will get back to you with the right answers. Thank you everyone for this session. Thank you very much.
Thank you. Thank you for Ron having me. Thank you. Good day.
Thank you.